Okay, welcome traders. We are just getting the release of US GDP figures. The revision for the third quarter comes in at 2.1%. Expectation was for a revision up from 1.5 to 2.1, so we're right in line there. Personal consumption slides to 3.0% versus 3.2. A little uptick in the price index, and the core PCE, the Fed's preferred gauge on inflation, right in line with expectations at 1.3%. Seeing not too much movement in the dollar here, broadly holding the range from the open of U.S. trade, but it doesn't look like we'll get any imminent pop on this release. Good morning to everyone here in the room. Great to be with you guys. Today is Tuesday, November 24th. Eileen, great to see you in the room. Farouk, David, Alan, Hussein, great to see you guys. So a mixed print at best. I would say that that slight pop down in the personal consumption might be weighing on the dollar a little bit, but certainly a nice upward revision from 1.5% to 2.1. That was the expectation for GDP in the third quarter. Quick look at the relative strength of the dollar so far. You can see that the dollar is sort of weak against most of its major counterparts. You did see some gains against the sterling, against the Kiwi, but most of the major counterparts here stronger against the dollar so far today. On the headlines, guys, I'm sure you might be hearing by now, there is a lot of talk about this Russian plane that was brought down by Turkey earlier today. There's going to be, it's hard to tell what kind of gauge it's going to have on the market, so I'm not going to necessarily stress that, but that's a story that we'll be following today to see if that offers any risk off. All right, let's jump right into the charts. So that was the biggest event risk, I would say, so far for the dollar this week. I mean, there's not much left on tap. You do get personal income numbers as you head into tomorrow, and then durable goods also tomorrow. And then we obviously have the U.S. break here for Thanksgiving. By the way, quick update on that, guys. We will be out, obviously, for Thursday. So after tonight's update, you might not see too much on the site until we get back on Sunday. Also keep in mind, again, the IDO, we got a response from IDO Search. There was a question during the webinar on when IDO actually takes the closing prices. Turns out IDO's software actually takes them from 11 a.m. Eastern, guys. So when you first log in, or when you log into the IDO Search platform, those are from 11 a.m. Eastern the previous day. So there's a little bit of a lag here for the shorter term time frames, but the monthly, 2-month, or 5-month, 3-month, year projections, those should be relatively unchanged. So there's some questions with regards to that. All right, let's jump right in. First thing we want to look at from yesterday, we'll take a look at yesterday's update, which was exclusively on the dollar CAD. Haven't really had many setups in play, guys. I've been focused largely on the dollar crosses. Last week, you remember that we were focused exclusively outside the dollar crosses. But this week, I think we're coming in some nice levels. So a quick look at the dollar CAD. I just wanted to highlight the possibility for a turnaround here. Here's what we look like on the loonie yesterday. Okay, and here's what we look like on the intraday chart. So the basic premise is this. Let me go back to that daily. This was a huge region in that it was we went over this in the webinar yesterday. If you were on daily FX, the high day close for the year came in right at 134.19. We probed just above that, okay, before pulling right back down. And again, the major critical resistance is still a bit higher. And you're basically looking at the stretch high they made for the year at 34.61 back in September, and then 100 off the low, 2 equal legs up, would take you into this region between 34.61 and 34.84. That being said, momentum continues to fail ahead of 60. And here's a pending trigger break that looks like it's basically giving out at this point. This trigger becomes operative if we finally make it below the 133 handle. So inside scalps, as far as playing the range, I wouldn't be too against that. But the major play here that we'll be looking for is either a breakdown below this region or a final push and break through the high day close that we failed at yesterday. Okay. Also keep in mind within the confines of this formation, just the near term, that rally that we made yesterday was almost a perfect tag of that median line, basic median line. So, long story short, I'm still favoring the short sides below 34.19. You did get an opportunity to get a small position in there yesterday, but hasn't been able to give us much push to the downside from 33.60. You did see a drop down to like 33.20. Keep in mind, you're only looking for about 20 pips on the ATR here, so play that accordingly. The more definitive break will be either a move sub 133 or that breakout above 34.19. Until then, guys, treat it as a range. So all in, all out on the scalps here for dollar CAD. Definitely at risk for a little bit more of a pop higher that we can sell, preferably against that high, to look for a pushback below that 133 handle. So basic 236, by the way, just an update on that report from yesterday. Basic 236 takes you to 3292, 3293. This is what we noted is the bullish invalidation level that you need to kind of break down. Go ahead and raise that at this point. Again, we'll focus on that 618 extension, mostly because it converges dead on with both the median line and that sliding parallel that caught the lows earlier last week. Both of those coincide as we get deeper into the session here today, right around the 133 handle. That's basically your key mark here for dollar CAD. As far as dollar CAD is concerned and CAD data, you really have nothing on tap for the remainder of the week. On the 27th, heading into the weekend, you do get industrial product prices, but really the main print for dollar CAD will be on the 1st of December. You get those GDP prices for September. So outside of that, we'll be looking for dollar price action to really drive the loonie alongside prices in crude. And I don't necessarily want to stress those at all times, but I think at this point, Jamie actually made a beautiful post in his update last night, pulling the two together. But just to show you where the crude trade is, and this is something, again, that we discussed earlier this week, 42.76, 43 handle, absolutely critical. And if you do see a topside break there, it would suggest possibility some further strength in the loonie, i.e. dollar CAD down. So key levels in crude, 40 into 43. Key levels in dollar CAD, 133 into 134.19. Questions on the loonie update? Mark, great to see you. Good morning. Avery says, hi, Mike, do you have any short-term triggers on sterling yen? We'll take a look at sterling yen. Let me jot that down. All right. Sorry about that, guys. Give me one moment. Okay, so that is a dollar CAD from yesterday. Next up on tap, I just want to go over the radar charts real quick because Aussie is right on tap. If there are no other further questions on loonie, we'll go ahead and move off. The Aussie chart is just right on. It's a real slow burner, but this was highlighted in the previous scalp update. Guys, keep in mind a quick little change here to the intraday charts page. If the pair is highlighted, go ahead and click on that, and it'll take you to the previous report highlighting that pair. It might have been a day ago, might have been a couple of days ago, but it just means there's more details on those levels if you're looking for it. So for the Aussie update, which was an update to Sunday's release, the levels are exactly the same. And this thing came right back, checked our bullish invalidation level, and rebounded off, keeping us constructive on the trade near term. If you guys recall, the bullish invalidation level was 71.57, 71.58. That's exactly where we tagged the low. Saw a nice rebound there. Take you right back through the 71.80 and 72 targets. And we were basically sitting right here at support to open up trade in Asia. Here's what Aussie looks like now. He did get a decent trigger to the upside. putting you back in the trade. There was some whipsaw action as you opened up deeper into European trade this morning. You might have gotten faked out on that one, but essentially you're still above this region at 72. The major breakout zone is still 72.40. Okay, I'll tell you why I still like the upside though. If you look at this just at an objective far out look, there's basic trend line resistance. You can see that channel support caught the lows rather nicely. You saw some real nice pivot action here, resistance, resistance, breakthrough, support. We broke through it again, resistance for a while, tagged it as support, move off. Still looking higher above essentially the European opening range low. But nothing's really changed on this. Okay, the bullish invalidation level still remains at 71.58, 71.57. Remember, at this point, this is now also the weekly opening range low. So objectively, if this gives out, you'd be looking for a run into that lower median line parallel. As it stands right now, still looking for a possible stretch back into 72.40. Now, the momentum signature hasn't really been able to turn over constructive yet. It's still sort of struggling here at this 60 region. So if we do get a pullback, again, I'd be looking for possible long triggers off that trendline, former trendline resistance. Should now offer support. Did offer support earlier in the session for a target, again, back up at 72.40. And then if we break above that, you likely see some nice stretches. 72.78 is a soft target. But more importantly, you'll be looking at this key confluence at 72.95 into the 73 handle. Here's what it looks like on the daily. This is like a really key support cushion that we were looking to hold. Probe below it yesterday, tagged that trendline resistance, now support, closed right there. And again, we're sitting right there right now. Any questions on Aussie? Levels still are right on point, wouldn't change anything. Looking constructive above 71.58. Looking for long triggers here into 72.40. A quick look. Where are my charts? Here they are. A quick look at the Aussie on the near term. Just a quick look at the momentum signature. I did want to note that you are seeing a little bit of a contraction in momentum, meaning making higher lows, higher lows, higher lows, higher lows. Momentum signature on the upside making lower highs, lower highs. So look for a break of this range here to give us some clear-cut definitive guidance here. But risk is for a pullback, and then you look to buy, look for a long trigger on that pullback for a stretch higher. Any questions on Aussie? Okay. Okay. A quick look here. I do want to just jump into that chart for you, Avery. He says, do you have any triggers for shorting sterling yen? Let me give you a quick look at what I'm looking at with sterling yen. Here's first the daily chart. Okay. I just want to be mindful of the fact that we're coming into this median line support. So before you look to necessarily jump into any short exposure at this point, I just want to point that out. This slope has offered some really nice pivots. You can see it catch that stretch high that we made both on the 5th and turned just ahead of it on the 19th. Here's the lower bound testing the lower median line parallel. So if this is in play, or if this slope is in play, be mindful of that right here. I do like the trigger break after holding 60 in resistance on momentum, a hallmark move. One other thing I'd point out to you real quick, Avery, is that you're heading into the weekly opening, the monthly rather, opening range low. So again, just be mindful of that support at the lows we made there on the 6th. That comes in at 184.29. Here's what sterling yen looks like near term. Let me snap these. Hold on one sec. Okay, so here's an updated chart. I actually was looking at this last night. Avery, if you want to take a snapshot of this, just feel free to click that camera button. But it's basically a break of this ascending formation that we had off the low. Even the last sliding parallel I extended off there gave out earlier in the week. So shorting from here as a trigger, I'd be very weary of. Okay, if you had caught this short prior to the break in momentum sub 30, I'd feel a little differently. But shorting while it's this far down, typically for me won't be something I'll be interested in doing if you're not short already. The best break here would have been the break of the essentially of the European opening range. On the 5-minute, just to sort of entertain the thought, or here's the 1-minute, seeing some divergence into the lows. In fact, here, looks like you actually are trying to get a little bit of a long trigger. You might get a little bit of a rebound here. Not an operative one. I wouldn't play it, again, because we're in way oversold territory. This is not when I'm going to start trying to fight the long side just yet. But certainly, I'd be looking for a rebound here before I try to short this, even on an intraday basis, Avery. If anything, that would be sort of the trigger you'd work with. If this thing gives us a little bit more of a push higher towards the opening range high for New York, then you see the trigger break. At least you'll have a stop to trade against. Nothing from here, though. Let's see what the 5 looks like real quick. So even for the 5, if you come back and test this trigger resistance and it holds, and the 1-minute trigger gives to the downside, again, a stop against the New York range high would be the scalp I would play. But for me, you're a little bit overextended here. You kind of missed this boat. Wait for it to come back on this one, Avery. I wouldn't necessarily chase this any lower from here. All right. Says, okay, got it. Thanks. Anytime. Anytime. Yeah, we have to be very, very careful, guys. There's a propensity always to want to kind of jump into the trade because you feel like you're missing it, but that's a very risky attitude. And um, if the ship has sailed, the ship has sailed. The market will always offer more opportunities. It's pointless for us to start chasing trades and giving up, kind of sidewaysing all our risk management for it. Even some channeling action here could offer a little bit of a rebound. Any questions on sterling yen? Interesting pair. I'm going to put that on the watch list here. John Fortune with a question on sterling yen says, "Hi Mike, how low do you think the sterling yen could go, seeing as it seems to have just completed a corrective pattern in the weekly?" So I don't necessarily play that game, John. How low can it go? I don't know how low it can go. I don't think no one knows how low it can go, right? The condition I want to be studying is whether it's in a condition to be bearish or whether it's conditioned to be bullish, and what are the key levels. That's it. I never look, and again, it's part of my personal style of trading. Not everyone's going to approach this the same way. But on a near-term approach, all I care about is the next support level. What's the next resistance level? That's it. If it breaks, I cross that bridge when we get there. Then I'll be looking for what the next downside target is. On the whole, sterling seasonality we know is rather weak for the yen. I think that the yen is sort of is the wild card here. If we take a quick segue, guys, well, let me just put things in perspective. For me, I wouldn't be surprised to see sterling yen come all the way back and test that major trendline support that dates back to the lows we made in October of 2013. That's sort of the guidance I've been working with on sterling yen, John. So as far as how low can this drop go, again, I'm looking for near-term support at this structure. If that gives out, I'd be looking for that 183 based on where we are in time, that 183.30 level, that trendline support to come and play as a little bit more of a key support level for sterling yen. You guys get the best of both worlds. Jamie's a little bit more with the weekly charts, the grander pictures, the longer term swing trades, longer uh, big picture type deals. I'm much more granular, John. So for me, all that matters is the condition the market's in and what's the next target we should be looking for. Does that make sense? He says, thanks, Mike. Much appreciated. Hey, John, always good seeing the room, man. Always feel free to throw out any questions that you have. All right, so that's Sterling Yen. You guys got me all interested in this, so I'll see if there's anything worth updating here tonight. But certainly is coming into an interesting area. All right, so we covered dollar CAD, Aussie dollar. We segued into sterling yen. Why not jump into sterling dollar? That was the next one on the radar charts from last night. So sterling dollar, here's what it looks like on the daily. Okay, the level of which we reversed off last week, I think kind of is the end all here. It was a 618 retracement of the range from the decline off the monthly high. It was former trendline support or the sliding parallel. Remember your basic technical analysis, guys. Break of support becomes resistance. That's the hallmark of the reversal play. A lot of people will tend to ask, well, when it breaks resistance or when it breaks support, Mike, you're always telling us not to chase the breakout, right? So what do you do? To validate it, there's got to be a test of it as support to validate the breakout. And you'll see this time and time again. Here's a sliding parallel that held off the June lows. Support, break to validate that the longer term break, here we are, come back, test it as resistance and push off. And this happens time and time again. Doesn't matter if it's a vertical or a horizontal, a lateral support line, or whether it's whether it's a slope. So long story short, that push now taking us back below the October open, which is 151.25. And again, that 618 we're still contending with right around 50, what is that? 50.90. So where do we go from here on the intraday? Here's what it looks like. Yesterday's piece, we said, look, there's a risk here near term for a little bit of a pop higher. Near-term resistance, 51.43 into 51.53. 51.53 being last week's low. Very simple. Really nice pivot in price. 51.43 being the 618. And within the confines of that region, you also had the median line off the highs. So that's exactly what happened. We came right into that region. We even tried to push through. Markets failed. You had a nice trigger here in momentum. You crashed right through. If you didn't get that initial momentum break, we came back to test that trigger as resistance, and this was actually the entry right here, 51.30, stop against 51.55, looking for about 25 pips. Should have cleaned up a little bit of that around 150.80. Again, that's 618. But at this point, you're essentially looking for a drop into the 51.40 level. One thing I do want to note, you could get a bounce off this trend line. Basic resistance, break, here we are testing it as support. So you could indeed get a little bit of a rebound here. You still want to stay bearish below that median line, below 151.43. Downside target still 150.44, 150.25 is the actual stretch low. This is the 618 extension of the decline. So you might see a little bit of a pop off that too. Any questions on the pound? So it kind of puts things in picture, puts things in perspective, excuse me, John, with your question on the sterling yen, right? And Avery. The picture seems to be fitting rather well here. I think for the sterling yen, we need to be a little bit more cautious of what's going on in the yen crosses in general, because dollar yen is still basically holding that range. Now, again, I do like the price action that we're seeing. If you guys recall, we were talking about this late last week on the Thursday webinar. And the break of channel support came back yesterday. Look where we found resistance and pushing off. Okay. Testing near-term support right 22.45, but you're basically looking for, again, key support down here at the 122 handle. Here's what dollar CAD looks like on the 30-minute, or dollar yen rather, on the 30-minute. Okay, seems to be holding within the confines of this formation rather well, actually. So this is just a pitchfork off the highs that we made for the month. You can see the median line offering some nice pivots in price. You're at support right about now. So dollar yen, I think, is going to be one of those pivotal or the pivotal play, I think, for the sterling yen trade, or the yen in general will be the pivotal play for the sterling yen trade. So keep that in mind, guys, who are watching that sterling yen position. Any questions on dollar yen before we move off? Really tight ATR. If you're looking to scalp this, honestly, 17 pips is hard to even do anything with. The 17 pip stop is going to always be difficult, guys. So, either play it with a little bit more patience, go for a half ATR and look for a little bit longer of a duration hold for the position, or wait it out until we either get a break sub 122 or a rally back up towards that 124 handle. Excuse me, 2340 level. Okay. Let's move right on. I have a question here from Mark Haverman. Says, waiting for Kiwi dollar. I am long, big time. Stop loss at 64.55. Let's take a look at Kiwi. So I put a piece on this yesterday as well on the radar charts that we might as well just cover it. That was the last piece from last night's update. So it's really, what's the word I want to see? What's the word I want to use here? There it is. So for Kiwi, the breakout level, in my humble opinion, again, comes in at 65.58. You're citing a target at 66.52, Mark. I love 66.43. Is actually a basic 38 too in the highs from the 5th of November. But the trade remains essentially we're looking for a turn for the Kiwi. Remember the larger scale picture on the daily charts that we've been going over as far as the shift in momentum. Here's what it looks like now. Let's just jump into the chart. So none of the levels have changed, and I haven't really shifted the focus at all either. You're looking for a little bit more of a concerted rebound. I wouldn't put it past this thing, Mark, to get another pullback into support. I know that actually isn't the swing trades are looking for entry. Oh yeah, they are. Jamie's looking for entry at 64.75. So just below that 64 level. This is the broader bullish invalidation idea. So I think at this point you made the weekly opening range low. And basically you look for long triggers right around that 618, which has been a nice pivot in price. But I'm not sure that it's quite ready yet. Keep in mind, we highlighted this trigger last night, right? We were coming right into 60. That actually held. I was kind of looking for this pop to come back up and then on the way down find a resistance trigger to take the trade. But we held 60, we broke the median line, or we broke the support trigger, and now you have momentum holding 60-40, 60-40, 60-40, and that's your hallmark range-bound market. Mark says, that's it. Weekly opening range, Jamie's entry is below that. Right. Yeah, so the weekly opening range is just above Jamie's entry at 64. What does he have it at? 64.75. In any event, watch this region, this whole region right here, for support. But I think you kind of chop sideways for a while here before you finally make a move. And again, depending on where we are in time, that basic trendline resistance off the high comes into play. By the way, 65.58 is just the weekly open, so keep that in mind. That basic trendline resistance later in the week here, as into Thanksgiving, is going to coincide right with that 236 retracement. Any questions on the Kiwi? Let's see if we have any triggers on this. We'll want to see that support level hold in momentum. Yeah, the momentum signature is really ugly on it, Mark. He says, "Thank you, sir. Hey, you're more than welcome, man." Listen, the momentum signature is pretty ugly on the near term, but I think it's a little bit clear on the farther out time frame. So really look for a definitive break out of that zone, 40-60. If you pop through, like I said, the weekly open, that trend line resistance, I think you'd be well off on those targets. First, just watch that 66.40 level ahead of that target that you noted at the 100. I think you're talking about the 100 off the low. I see what you're looking at. I see what you're looking at. Actually, that might actually play out a little bit better based on the slope, but I'd watch that 38 level just because of how many pivots we've seen on it. Okay? Right there is support, right there is resistance, and a longer day at 38 too. So just keep that a little bit of a contentious pivot region there. Looks good. Thanks for that 38 2 level, he says. You're more than welcome, sir. All right, so that is Kiwi dollar from last night. So those are the charts from last night. I do want to go over the Aussie key setup from the night before. You know, it's funny how these things work. We were talking in yesterday's webinar about the fact that Aussie Kiwi looks like it's made a legit breakout, but we want to kind of see the close above it. Well, guess what? This thing took back all the gains and essentially it wasn't truly a doji, but you came back and closed right at that 618. So guys, it leaves me right it leaves me right back to where I was yesterday. I was looking for a close above this level to look to buy pullbacks. We didn't close above this level, so I didn't do anything. And here we are pushing through again. Look, watch momentum, break above 60. We still haven't gotten it on a closed basis. Watch for a close above this region. We still haven't gotten it on a closed basis, but essentially the breakout target is still 111.15, and that's 100% extension off of the lows. This is the daily chart looks like. Here's Aussie key on the intraday. You can see us holding this pattern still very, very well. If this constitutes a break of the weekly opening range, it's a pitiful one, but if it is, you'd look to find support basically around where we are right now. Okay, and at this point, we want to choke up our bullish invalidation level, which was at 109.65. We want to choke that up at this point to the weekly opening range low. And that coincides very nicely with these median lines. Remember the whole premise of this trade, guys. This median line that dates back to the January 2014 lows is the pivot that we're working against. As long as you stay above that, the trade's constructive. We just need momentum to follow through with a break above 60 for the first time, mind you, since July. And the first time from sub 40 since back here in May. And obviously that was the onset of a much more substantiated rally higher. So the propensity's there. I would love to stay constructive on this trade. Let's just get, one close above this region would make me feel a lot better, but we're probably looking higher well above 110. Any questions on Aussie Key? That update, by the way, was the update for the 19th. Whoop, wrong. 22nd. So there's that link for you. Okay. Kiwis, Aussie, Kiwi, Sterling. All right. So, guys, I actually flew through this today. If there aren't any questions or trade levels on pairs you guys want to look at, I see Avery wants to also look at Euro Key. Any scalp opportunity within the range of 162.20 and 165.50. Let's take a look. Euro Key, huh? Yeah, absolutely. I think we went over this last week. This is as range bound as it gets, and in fact, you've now made multiple tests of the monthly opening range high, multiple tests of not only this month's opening range low, but last month's range low in general. So definitely that 50% retracement being targeted very, very clearly um, on the Euro key. In fact, if you look back, if you keep going back, that 62, 62.20 region has defined essentially the last 2 years. Here's the opening range low for the year in January. You broke that in March. You closed the year pretty close to the lows. Again, here's the pivot break above, and now you're sitting on it as support. Monthly opening range high is pretty clear, right around that 65.50 level. Here's what the scalp looks like. Yeah, in a trade like this, Avery, I would just play it as a range. Very, very simple. Try to buy towards support, try to sell towards resistance, looking for 41 pips. Wouldn't really look to play the breakout until we finally get it. Just because also, relatively speaking, Kiwi dollar on the cusp maybe of a turn higher. Euro dollar, certainly there's a lot of things to look at there that could be suggesting we're going to see a turn higher as well. So that would lead or translate to Euro strength and Kiwi strength, which could give us some more lateral movement. If we break the weekly opening range high, just objectively here, that would be a shift to the upside and probably see a topside test of that range back towards 65.35. Let's see what it looks like on the near term. It's the high in price. Oops. Yeah, I'd still be looking at buy pullbacks. I'd still be looking at buy pullbacks as long as you keep that key region in view. Again, this is one of those trades where it's just a range. There's really not much to it beyond that. Avery, does that help? Sorry, I don't have a little bit more of a concrete measure play for you here, but I mean, it's in the range until it's not. Very, very simple. I wouldn't overthink this one. This is pretty big support, though. Pretty big support. Hey, Craig says, sorry to be late, Michael. No problem. He says, could you talk a bit about the art of the stop? My last 5 scalps have all hit my conviction stop and then turned around and gone exactly where I thought they would, except without me in the trade. Yeah, it can be frustrating. He says, I have tried adding a cushion of 2 to 5 and 10 pips, but each time I've stopped out just before it turned. Do you add a few pips as cushion? So, Craig, um, first of all, I know the frustration. I know exactly what you're going through. I've been there. I still occasion that spot every now and then. Look, if you find yourself getting stopped out um, over and over again, the worst thing you can start to do, Craig, is start to stretch the stops further out. Okay, if we're talking about a trade that you're in and you're heading into an interest rate decision, non-farm payroll, CPI prints, GDP prints, then yeah, maybe I'll add a cushion of maybe 15 pips. Okay, but on a regular basis, you don't want to start doing that because now you're starting to act arbitrarily. You're not acting on what's the best interest of the strategy. You're starting to say, I hope, I don't want to get stopped out, so I'm going to push out that stop. Not a good idea, Craig. I would challenge you and say this. The problem is not your stop. If you find that that's the issue, the problem is actually the entry. So Craig, as opposed to trying to figure out why you keep getting stopped out, go back and examine where you entered the trade and what triggered that position. Maybe you're jumping the gun a little too early. Maybe you're not waiting for the level to actually come right there in front of you, and you're kind of just jumping in. But the tight, I just want to say one thing. I'm gonna not ditch the question, but guys, when you're working with such a near-term trading strategy like this, the most critical part of it, the most critical part is actually the entry. It's not the stop. When you're trading with something a little bit more give and take, sometimes you'll hear Jamie says, I just want to be in the trade. He's more of a swing, more of a longer term play. Yeah, at that point you have that cushion. It's not going to make a difference if your stop is 50 or 56 pips, right? Or 59 pips. But when you're working with a smaller trading strategy, it's all about that entry because you don't have that room. So, Craig, I hope that offers some help on that. Cushions or adding to your stops to blowing them out are typically things I'll do just during or ahead of major key event risk if I'm in a trade. Um, but if you start to do that, man, you're really going to start to skew your risk to reward ratio, and now every loss is going to take out your last 2 good trades, your last 3 good trades, right? And that's not the way we want to be near term trading. So Craig, let me know if that helps, man. He says, thanks, helpful. Let me know if you need any other specifics on that. I know where you're coming from, man. Don't worry about it. It's kind of learning, growing pains. Everyone goes through it. We kind of just want to make sure that we're stressing a little bit more when we're looking to jump in the trade, especially if you see yourself getting stopped out repeatedly. And sometimes, Craig, another thing I want to say is sometimes our bias is just wrong. Okay, if I'm looking for a Euro Kiwi long play and I get stopped off on the first trade, on the second trade, typically on that, I'll leave that set up. I'll wait it out, look for a little bit more clarity in price action, and then we'll look to revisit it. The worst thing you can do is called revenge trading, where you get stopped out of a trade, but you really still think it's going to move over, so you just jump back in, and the market just moves against you and against you and against you. So we want to be mindful of those behaviors that may be adverse to our performance. Mark Haverman says, Euro sterling, quick look. Sure. Euro sterling. See what the grandpa trade's doing. Sorry about that. Almost. So it looks like it's making the turn. And in fact, if sterling does what we think it's going to do and euro does what we think it's going to do, this would actually be a really nice rebound play. 236 comes in just above that region. So I would sort of be interested in this trade here, looking for resistance near the 71 level. Or just ahead of. You're heading into the resistance right now. Let's see what it looks like on the near term. Yeah, it looks like a breakout to me. Near term, let's add that 236. Mark says, yes, they're looking for a short, but maybe higher, 71.69. 71.69, you have that 38.2 there. Here's my problem with Euro Pound. It's a slow burning trade, so it's something you need to sit in for a while. Um, and the momentum looks like it could be given out. Yeah, I would be looking for the monthly open, which comes in 71.37 or so. Let me actually give you the exact monthly open. The exact monthly open comes in at 71.38. Okay, and then 71.75. Yeah, right around that 38 too. It's also a nice swing high for the opening range of August. Might be a nice level. I don't really like the trade. You guys know me and Grandpa. I think it can move a little bit higher from here. I'd be looking for initial targets at 71. This would be the near-term breakout for me. 71.70 would be sort of just the first initial target. And that might not seem a lot to you guys, but remember, this is a daily ATR of 62 pips. And while that might seem like it's not a lot from a pip standpoint, which it isn't by any means, you're talking about sterling pips. So obviously they hold a lot more value um, as far as your P&L is concerned. But for what it's worth, Mark, I hope that helps. He gives a little chuckle and says, okay, thank you. More than welcome. Let's see. Kyle says, revenge trading, quote unquote. Mike, you're killing me, LOL. Yeah, it's actually more common than you think, Kyle, especially for near-term traders. Craig says, not to dwell on the bad, but what's your worst stretch in the last year? Oh, what do you mean worst stretch, Craig, of bad trades in a row? I think there was one point, not this February, last February, where I didn't have one winning trade for the entire month. It's really painful, hurt, really sucked. And those things happen. You know what I mean? A lot of the times, guys, if you're too close to the charts, it can hurt too. So do yourself a favor, get up, walk away from the charts, come back, reassess the situation. Kind of if you keep your finger on the pulse the entire time, you can start to make a mess of things. But yeah, I would probably say, Craig, that was my worst stretch last year. There was a stretch where there was literally a whole month where it was just knocking, just killing me. But it's your ability to pick yourself up back from those times that really defines a trader. And again, we heard it said a million times, you're not a real trader until you've taken a real loss. It's that knowing how to deal with that, knowing how to brush yourself off and step on is what helps you grow as a trader, Craig. So I don't want you to feel discouraged, man, especially if you've had a couple of trades that have gone against you, or you've had a string of trades that have gone against you. No problem. Market will always provide more. Lower your leverage until you start to see a little bit more conviction, until you've turned the corner, and then we'll ramp it up again. All right? We've all been there, man. If you haven't already, says John Fortune, could you take a look at Kiwi Cat? Sure can. Here's what Kiwi Cat looks like on the daily. Oops. And here's what it looks like on the intraday. By the way, crude making that push into 43, 13. What is that? 43.18 is the actual 618 extension. The low day close from last month actually comes in at 43.38, but you get the picture. If the break happens here and you top that level, you'd be looking for CAD strength to follow suit. And in fact, here's dollar CAD making a move to the downside. Again, look for that initial key target, 133.13 into the 133 handle. But sorry about that. Sterling, or Kiwi CAD rather, so we were looking at this last week. We got the topside break, the invalidation level, shifted the focus to the upside. I still think you look higher here. Now, if we do get CAD strength and we get the final break below this formation that we've been sitting in for dollar CAD for the longest time, then I think you have a little bit of a story. You might see Kiwi CAD chop a little bit more sideways. Remember, this thing's been holding within the confines of this advance for a while here. So if we finally make it out the underbelly, I think that CAD strength might put some pressure or limit rather the top side for Kiwi CAD. Yeah, there's nothing here for me. Who was asking about this? John, there's nothing here for me, man. Also, look, the weekly opening range, when it just melts like this, we checked it, and it looks like it's set, but with a quarterly ATR of just 23 pips, you're neither at support nor at resistance. There's nothing here to be done for me. If you put a gun to my head, I'd still say we'd go higher, but you just rebounded off of that sliding parallel, moved off. You could see this drop a little bit lower, then push to the upside. I don't know. It's not a trade I'm necessarily interested in. Tell you what would make me interested in this pair, John. If we break the opening range low for the week, momentum finally makes it below 40 for the first time, that would be a short signal. I'd be looking to sell rallies back towards that 100. Or momentum top 60 and we finally make it back above 87.50, which was kind of the key pivotal region we were watching for 3 whole weeks. Last week, we literally closed the week above it, and I thought it was going to be a continuation, but it looks like that sliding parallel is still offering some resistance here near term. Does that make sense? John says, thanks, bud. Yeah, there are better pairs out there. I agree. Yeah, I think there's a little bit more opportunity on some of the dollar crosses, specifically as you get closer towards the start of December trade, and everyone's going to be eyeing what's going to go on with the FOMC, whether we're finally going to get that last interest meeting or the last FOMC meeting giving us a hike before 2016. But for some of the calm crosses, if you had to trade across, still be more rather interested in Aussie key. Make sense? All right, guys. So that's going to wrap it up for this session. We'll pick things up again tomorrow. Again, keep in mind tomorrow we do have the midweek strategy webinar as planned. The only webinar we'll be leaving off this week is actually for Thursday morning, which will be Thanksgiving here in the U.S. As far as the economic doc is concerned, you're pretty quiet for the remainder of the session. Later on, you do get Richmond Fed Manufacturing Index at 10. So in just over half an hour, and also Consumer Confidence Index here in the United States expected to rise to 99.5 from 97.6. Keep your eyes on some of these geopolitical risks that we're seeing today. Unfortunately, these news events keep happening more and more often. It hasn't really been a major indicator of shift in risk markets just yet, but we'll definitely be keeping our eye close to these reports coming out across these wires. So we'll wrap it up here. I'll see you guys tomorrow morning. Best of luck trading today. We'll see you then. Cheers.